A gracious good morning, GM Universe. This is Coach T, Professor Tommy Halstead. I got my GCU hat on today, and instead of Rose, I'll cycle between that Harvard, Purdue, all my schools that I teach at or go to. The We've got an awesome decision to recap here. I'm going to try to keep it much shorter because scaffolding is down. You're all doing fantastic on your decisions. You've really got this down, understand what's going on. We'll use the traditional kind of go through an initial look at the financials and the faculty report that we call our EBIT bars. And you can see, you'll be able to see that from decision one, there's some amazing changes. In our last video, I said don't count yellow out because they were yellow was kind of dying, especially in eco, like everybody does, and yet they hadn't really kind of figured out what they should do to level off in family and stop the bleeding in low cost. Well, what's happened is you have to look at the bars, and let me share my screen and jump over to that report so we can look at it. So here we have decision two, and we'll compare it. We'll throw some graphics up, back and down, back and forth. And especially this part of it are all of our various financials for decision two. And you can take screenshots of these, but I'm also going to put these on Halo with our usual analysis of kind of what's going on. This is low cost. Let's look at the main. So on the main, you can see here that it's a 1, 2, 3 really close in terms of everybody's 1 point off. There was a tie with blue and red last time, and blue moved ahead a little bit because those financial indicators are so important. But yellow also did fantastic. When you see, this is also, beta from stocks, which is variance or variability, standard deviation, square root, all that good stuff. If you had a band going down under here and a band up there, how can possibly blue be number one when there's a lot less variance between yellow and red? Well, it depends on the strategy. This is a strategy course. And the question is, are you going to back off of certain lines that kill you all the time, like low cost and eco, and then focus heavily on family and image at first? And as the last few decisions, maybe put a little bit more into those two, or are you going to try to do a full portfolio? Yellow's done a great job of really backing off of, you'll remember in decision, everybody's kind of even in decision zero with both both low cost and eco being terrible lines because this is a turnaround. And by the end of the sim, you see the variability going down, or you see less down here, like in blue, and less here because they backed off those lines and much greater work and family and image working. It's got a flywheel started. But some teams do good in all. You see it above the line on all of them. But by decision 5, the goal is to get everybody so there's less variability. So it's down here or way, way up here, which would be very unusual. But at least getting ARE and Rosé out of the loss columns. So you might say, well, my goodness, there looks like there's the least variability, which is the spread between the top and the bottom of yellow, which means they got an all portfolio style. And you got to look at leading versus lagging indicators. And what's the pipeline? What is the next best thing that you're going to do in next period compared to your competitors and what the customers want? So we'll do our traditional, take a look at the white lines, and we'll look at lost orders over inventory to see how all three teams are doing on that very crucial question of matching supply to demand that really drives this EBIT. And we can just look at each lost order and say, I mean, I can predict right now and tell you that, when you look at the bands of yellow, they've got much closer matching their supply and demand, and so has red. Blue still has a lot of variability because they're still not matching supply and demand in low cost and eco. So and also, I mean, of course, image with red here is a major question mark, and red will have to really look at it and also look at what blue and yellow are doing. The the old saying, emulate the best, goes for the sim, but it doesn't mean not in BUs, in your business units. You have to look business unit by business unit and say, blue is the one to emulate here in image. What are they doing right? Look at their numbers, look at ours. How are they different? How are they close to the white line? What are they doing in marketing? What are those indicators? Now that's lagging, that's not going to say, oh, next year it'll be the same because your investments are going to change some of those indicators, but it's still a good way to catch up and to make sure you're at least break even by the end of the sim. It is, it's really unusual. All three are unusual to have this much profit and good rosé and ARE for blue already with that much of a flywheel starting in family and image, which they've done much better in, and also having the other two teams being close to break even line this early by decision two. It's not it is really surprising from one but not from the other because there's some really good finance and accounting people in this class. To be honest with you, I might have a class of 30 people sometimes, but there's only two finance and accounting people in the whole class. Here you have a wealth of both validators and finance and accounting people. So you folks can really, when I say something like watch your price or take a look at Rosé, manage to EBIT, everybody contributes really well. I'm seeing on the text groups, I'm saying, hey, let's keep an eye on this. Let's lower our costs here. Let's lower our price a little bit or raise our price a little bit here. So I on Halo, I will be showing some differences between the three teams in the announcements. Remember, especially validators, look at the announcement, give the information back to your teams. But the other thing is these teams are just Gem is just truly a gem in terms of the communication. You are just really hanging together as teams. Everybody's really communicative. You're loving. We're a Christian school. We love God. We love our patriots. And everybody is when somebody is having a problem with their schedule, everybody kind of accommodates. It's just perfect. And it's like, wow, how is this doing all this stuff like the real world? It is because when you're working remote and you're trying to talk to people all over the world and get together in a meeting, in a Zoom, you're gonna have the same problems. Kids in the background, I've got a test light, I'm in the military, or I've got, another class, or I'm working. There's all these things that interfere. So, thank you so much for making the sacrifices and making this work. It'll really stick with you for a long time. So now let's jump into our usual white lines and then our lost orders over inventory. Okay, here we go. We're going to go quickly through each of these for all four, for all three. So you're going to see some amazing matches here, obviously by seeing what has happened well with each line. And I'm going to be looking kind of cold looking. I can drop some things in here in the video, but with the comparing the marketing, engineering, pricing, and last orders, those main indicators that you really have to focus on with what's happening with EBIT. And EBIT isn't everything, but it's definitely sits right in between ROCE, retained earnings, and are you having profitable revenues or not? And look at this match. It's just absolutely red has got, and then you'd say, wow, they have got their act together in low cost. Marketing is starting to become an issue, but it's you can just see the indicators here. So take a snapshot, see what the best are doing, and what do you need to do. If you're blue and you're dying in low cost, and you look at red and you say, wait a minute, they're positive in low cost, which is really hard to do. And yellow now has also turned positive in low cost, which is a great jump because from decision one they were underwater quite a bit. Now they've become positive. Yellow's doing some good things there too. So, and it's a tough line. Now going to a good line where red is doing break even, doing ahead, but they're not doing as good. You can see they're underinvesting in family, but they're really keeping the variance down. And that space between there is just the underinvestment, but don't have a lot of crossover sine curves like we have. So the when they're really close like this, I'm trying to see, is this comfort here? What is this? Is family? Family cares about comfort. Where is comfort? Comfort's on. Okay, comfort seven's a good number for comfort. Where is comfort on there? Okay, look at comfort, how close they are. So they're really seeing things that are important like comfort. Comfort. What about car dealerships and family? Dealership proximity. Yes, so I've seen some twos and threes there. Five is great. Sometimes they want six or seven, but this I'd say five maybe is a little bit of an underinvestment. In that, let's take a look at that. It's where's our car dealerships? It should be. That's not too bad. See, that's just just about right where it should be. So, all right, let's jump to eco-friendly. And we know that eco-friendly is killing everybody, but red again is red just the surprise was in image where red last time when last time an image, red was almost at break even there for decision one. And this time red kind of crashed and burned a little bit at image, which is really surprising, but we'll have to take a look what happened. But this is eco, which then blue had a major problem here, but yellow did really good. So blue should look at both red and yellow as we go through the years in eco and say, emulate the best what's going on here. How close are the match? Is this being matched, given that red did a really good job? In eco. So they've got these down pretty well. In marketing, also, they figured out the proximity is important, but they're not overdoing the the brand power thing, which you can overdo by overinvesting that because that drives capex up. So again, really good in eco. You can see what they're doing right. And now, oh, what happened in image? Image, well, again, it's a pretty good match, but they're again in image we have I can predict what's going on here. When you have something this high, that means you're going to nail revenue. You're cold plating the car. You're giving the people what they want, but I bet you have a production problem here because, again, image. I bet you the lost orders are on. I haven't looked at them. I'm just looking at some of this for the first time. I do my analysis usually on Saturday, and then on Sunday do a whole bunch of number crunching until you can watch this on Sunday or Monday, the video. Usually people watch it on Monday, our folks, because you're all busy on the weekends and posting and finishing assignments off and midnight deadlines and all that good stuff. So that's just a quick look at where we had a little more trouble with red and image. Let's look at all right, let's start with blue in low cost. And blue's going to want to look at what red did there. And we probably don't have as close a match here. I didn't look at these. Yeah, see, okay, see, all right, you can see we got a little more wobbly, although this isn't absolutely terrible. So again, I would guess when these are pretty close like this with a nice run like this, it means you're really getting what the customers want. Let's see, where is our number here? Dealership, that's pretty good. Oh, that's pretty good too. Those are both really close. So the really understanding value proposition, value chain, and that kind of stuff. Let's look at budget and low cost. All right, we've got $40, which is I just want to remember the price here, and then look at market share. So blue needs just to look at red in terms of when we look at lost orders because there's probably a problem here with blue in low cost with inventory. This is usually a sign when this is doing well, but the EBIT isn't. It means they're selling not profitably because they're either getting orders and not being able to fill them, or they're over marketing but not producing, or they're getting orders but they are producing but they're not marketing enough. So you've got inventory build up. All right, say that fast 3 times. Let's jump on family. How did Blue did really well in family, didn't they? Blue did really well in family. So we got some over investing here, but what I'm guessing in family, okay, see that this was a mistake before. Now they've got this up for because family cares about dealer proximity. This is a great profile from many years of looking at these, but you can see the story just in terms of investment here. And what's important, they nailed consumption, which is very hard, and it's hard to be profitable. Um, Family and image are more profitable because they're growing their growth, but you have to be very careful the capex in them of not gold plating. And these aren't too big of. This isn't gold plated. I mean, we could probably invest a little. What is this robustness? Yeah, where we are. Yeah, that could be at 4, but that you can't say that for next time because this is going to change. That's a lagging indicator. Let's look at eco. How did Blue do in eco? I think Blue got killed in eco, right? They're our winning team, but I think they had problems in eco. All right, there's a little bit of an over-under estimate, but this isn't too bad. This is a really good profile. So absolutely eco's got to do, which it always does. Eco's problem is production versus inventory. You've given a lot of inventory at the beginning and you're way deep down. And my advice to Blue is look at red and look at yellow in eco and what they're doing. Not just the sliders, but especially look at loss overs over inventory, where they're pricing and that good stuff. So in terms of here is, we'll look at the major. This is what, 65? That's 65, just so you get a shot of that. We'll go to image. Now, of course, blue is basically winning the sim because they've got a massive investment in image and a massive production budget. You'll see that they're really close to the zero line in image, which is going to drive EBIT way up. Design, yeah, image loves design. I don't know if yeah, see, eight is not bad there. Wait, where is this at? Yeah, see, this is not bad at all. Performance, that a little bit overinvestment there. Comfort is close, and they're over investing a little bit in size is more important than family, but it's still not really gigantic here, right? There, you have a Ferrari. It's the size. Technology is a big important thing, so they're investing heavily, and sure enough, that's what the customer wants. Number of models is always important. And then novelty, of course, is really important too. Number of models. Now, number of models, just remember with this, there's a couple things like consumption and number of models that really, really drive CapEx, which drives cash, which drives down profit. So everybody's being careful with these two, even in their beautiful image line. But red's got to take a look at this and say, what am I doing differently than what blue's doing here, and what can we do kind of going forward in the future? So let's hop into our wonderfully changed and doing well yellow. Now, yellow's kind of gotten good news in everything, so we're not expecting too bad of matches here and not any major changes in what they're doing because they're saying let's make small changes, but let's get ourselves fixed, especially where they were absolutely being killed in eco. So they were doing they weren't they're doing a little less well in image, but they actually got eco done better, and they would be the number two or number one team if they did what they did in eco family and low, and they didn't drop off an image what they did. So this is just better worth from decision one to decision two. So get your own D1 and D2s out for D3 and say, geez, what did we do different where we lost our edge in image, but then did everything else fantastic, including doing better in family and doing better in low cost. So low cost, we'd expect this to be awesome. It is awesome. Let's jump up to family, and we know that better or worse from family, they're about the same in family as they were last time, but they're good. They're well above. They're understanding their customers. They're pricing right. They're over investing what consumption. Yeah, family does care about consumption to an extent, but again, that's very expensive. The higher that goes up, what are we on in consumption here? That's not terrible. What should we have 5 here? What is consumption here? We could invest. I don't know. This is really not that bad. I mean, you could put it at a six, but then you got to watch your profit. Let's see what's going on with eco-friendly. Eco last time. Oh, eco. Oh my goodness. I did not notice that. I saw the variability was down, but eco is a massive win here. And what they did is just backed off of it. They just backed off and are these at four or are they five? Awesome. This is what you do when you kind of want to shut a line down, where you want to match your loss over your inventory. You don't get radical on any of these things. You don't make any changes, but you're very careful how you price, and you're very careful you price. And we'll look at the finales of everybody's financials quickly here too. But that's a great that's really an amazing story in eco. It shows blue take note of this because blue, you want to do what red and yellow did in terms of your production too. So let's look at the production numbers when we get to the final corporate budgets, because that'll really help you, your plant capacity. So you can see that in all the lines that we give you as snapshots. Also, I'll send them to your validators if you want them. Any other financials you want, say, hey, I'd like to see this, and I'll send it. So you have all the information you need to make your decisions. So finally, where are we at in image? I think we're still doing good in image. We just flattened out a little. We dropped a little from where they were in decision one in image. So we had a little more. Oh yeah, okay. I'm looking at their white line, and Oh, they were absolutely dead on in image last time. Oh yeah, yeah. Okay, yellow did have a little problem because they were profitable, pretty profitable, almost close to number one. They were higher than red, and this time both red and yellow dropped down in image, and blue did much better. So red and yellow both have to look at what blue's doing in image. And you can see this here. There is a little mismatch here in terms of figuring out what to design for image. Not terrible, but again, profitability, you got to look at what are you doing with number of models, what are you doing with consumption, which you're doing really good at. Is what's robustness and what is robustness at? Okay, that's moderate, and that's moderate is size, which is probably a little bit of an overinvestment at five instead of four. But anyway, yeah, so that's just who's got to look at whom in all the lines. Let's go over to lost orders over inventory and then compare it to EBIT. All right, now here we are in LOI, and this should be low cost, and we shouldn't have too much inventory looking at this. Blue's got some issues here for sure on the EBIT. Red and yellow are doing well. The zero line should be fairly high. Nobody's building inventory here, so zero's got to be, oh man, this is small type. Yes, there's zero right here. Okay, look, we've got a tiny bit of inventory, and red has done really well staying within this band, the variability again. Blue is the only ones having our leaders having, and again, I said leader, God bless you, we're all 1 point apart. So, one, two, three, just like that. So it's not like any giant swings. Everybody doing fantastic. But blue is the leader. And so this is an area they may want to look at with low cost in terms of what are they producing. They are having still, they had inventory problems. Nobody's having inventory. Nobody's above here. So you've got the inventory fixed. But everybody, and look what yellow did. I mean, yellow was a comeback, right? Yeah, yellow is doing really good. They were doing good in low cost, and they're still doing okay. They're about break even because they had this dip here, decision zero, one, and two, but they're exactly matched supply and demand now. Good job. Good job. And that could be just shutting it down. I mean, you've got to spend your depreciation, or you're going to have really unhappy workers. You got to keep your HR. But if you're shutting a plant down, you're just going to try to make less models, but make enough for what your demand are. So you're not doing a lot of driving and marketing. And I'm not telling you to shut something down. There are teams that have flywheels in all four. And yellow actually could because they're breaking even on all of them. But if you're not doing well in one, put that money back off on that one, put the money into the one you are doing well. That's a portfolio strategy where you're looking at, but then you also have to look at growth. Michael Porter, your stars and your dogs and your question marks, you have to really, in your cows, you have to look at who's going to be growing in decision four and five, three, four, and five. And for decision three, you're going to see some picking up of growth and low cost and eco. So Blue's got to just be very careful that they don't invest too much in marketing, but don't produce enough. And if you're shutting it down, you still have to produce some for the inventory that you do have that you're driving the demand on if you got those sliders anywhere above four or five. And you're actually investing in that, or your price is high compared to the competitors, or I mean low compared to the competitors. So that's Blue's issue. And you can again see how well this is reflected, how close these teams are to zero, and how blue had an issue in low cost. And this is very much reflected in LOI. So it's a great indicator, leading, not just lagging. Uh, Family zero's got to be down way down here because everybody's doing pretty well. Family, actually, everybody's doing really well in family. Yellow did drop down, right? Was yellow doing good in family? Yellow's almost even. Red, red had a problem in family in that, oh, they invested in family, but they have just a small kind of, so red, you're complicated in family. Red, you really got to look at both the sliders and your production, but you don't have to do a lot of big changes because you're pretty close to matching your supply to demand. So you can invest a little more in marketing and make a little more. Blue must be a leader in family. Look at this. What a trend here. They've got almost a zero line here. They're building a slight amount of inventory. And of course, yellow's got a lot of inventory, but they're they're making a lot too. So they're not way up in family, but yellow's doing real well. That's why they're so close in points to red, only 1 point apart because these balance off. So um, let's take a look at eco. All righty. What's blue had a big problem eco, right? Where's zero? All right. Yeah, we can see what's happening with blue here. They're building a huge amount of inventory. So they don't have the lost orders, but you don't have the lost orders in terms of production, but they're not they're 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 having issues with the building of their inventory. So we looked at the sliders there, and yes, and we did say that. We said, I bet you that in eco that blue is building inventory, and they are. So I'm not kidding you. I've never seen this. I've not seen this. I'm just guessing at it like you all do, except I'm not taking, I spend many more hours in the next couple days here before Monday to really analyze the numbers here. But I want to get this video out soon so you can take your pictures and save them for your final presentations, your papers, and everything else due on to make your life easier on Halo. Because these images and you take these pictures will be what you put in your presentations, and then you give them back to me. And then you comment, oh, we know what we did right here. We know what we did wrong here. I am literally giving you the words for your final reports, your final papers, your final everything by kind of showing you the differences. And then you see what you did right and did wrong and you changed it. And that's the whole point of the sim. The Again, everyone can get A pluses. I have a couple folks having some problem, I should say, in the class with the grading because they're not keeping up with the participation and they missed a couple of papers and projects. And those are auto graded. I have a lot of flexibility on grading with a lot of things, but you can't totally not turn anything in and pass the class. You have got to turn something in. I'm very liberal. If all your teammates are saying they're showing up for every meeting, they're really contributing, and the peer reviews are up, it's 400 points. It's your whole grade of passing and failing are given by your peers and the sim. So it's weighted that way. But that doesn't mean you can just skip papers altogether. If you don't do APA and it's not 2,000 words, but it's well intentioned, it talks about the sim and you're busy and it's not gigantic, I'm still okay with it. Just please turn it in. Just and also don't lose points they don't. It just kills me if you don't even write two sentences and somebody has no participation for the whole week. 10 minutes and you get those 20 points or whatever. So I just, it drives me crazy when something's really easy. But again, if you're working hard on the sim, working with your teammates, which everybody is, um, uh, don't, please don't. I don't know if we're past drop add by now. I might have a couple of EAs where students are just absolutely not showing up to the teams. We're heading into peer reviews now. And it'd be better to get out of the class, drop it, take it again somewhere else if you're not contributing to your team. That's all I can say because everybody really is. I'm getting a huge amount of the students are working together really well, all our colleagues. But if a couple people aren't showing up at all and aren't contributing to it, you cannot pass this class, which I just hate. But anyway, so all right, let's look at image, which anybody only read, well, yellow's done really, well, wait a minute. From D1 to D2, yeah, blue did well. Red did better, and yeah, no, yellow did okay too. From one to no, actually, red had some problems in image, didn't they? I can know better by just looking at this because it looks like red and yellow both had different issues here with the EBIT. Makes a lot of sense. Okay, this is an absolute. This is a photo moment of why EBIT and your LOI go together. Red, you're expecting from decision one, red was not too bad, almost break even, and now they're much deeper in trouble because they're losing all these orders. So they're manufacturing, I mean, they're not making them, but they're marketing them in image. We've got to make more of these vehicles. You got to do the little formula for plant capacity, and you've got to be very careful, Red. Not that you're not doing really well. I mean, you're even almost in number one. Everyone's doing great. But blue, you can see, is kind of look at blue and say, what do we want to do in family? Well, they're doing really well matching those production numbers. Yellow is just the opposite problem, where they had, yeah, yellow did better last time, decision one, I think. It should have been better because it's building inventory. That means it should have dropped. Yes, okay, all right. Okay, yeah, that's Image Yellow did drop below break even, and last decision they were way above break even. They were making a lot of money on that. So, wow, Yellow, here's your opportunity. Look at this. Figure out how to market these. Look at your price. You're making them fine, but you're not selling as much an image as you could be. You fix that just a little, not big change, just a little bit, and you could jump into the lead or be very close. I mean, you're already close. You're a couple points away, but still, you've done so good at like red has in leveling out, and like blue has in the key indicators, which are Rosé, EBIT, and ARE. So it's three very different strategies going on here. Blue's saying, let's do really well. Let's really watch our numbers. They obviously have someone that really knows finance and are saying, let's really focus on that. And that's why they're number one. Red's a good balance between the two. And yellow is really doing kind of an all portfolio strategy. Let's be conservative in all of them, but see if we can't match LOI. So let me finalize this, get towards the end of our time here, and look at the corporate side of the budget. Quick shot of corporate red. Quick shot of corporate blue. Again, we can look at lost orders, we can look at orders, we can look at sales and see where our LOIs are all coming from. We can see our EBIT, how it's growing and not growing, and see how our number one team is doing in terms of what they're doing with facility investments, in each line, and how do those result in lost orders or not lost orders. Yellow and corporate. And then we'll do quick financials for the lines. For quick summaries here of our lines on, we saw the corporate budgets and what was driving it. Now we can look at things like individual results by line. Here's low cost. And you can see where we're doing a little bit of um, gold plating in low cost. And his full cost must be a bit of a problem for a blue team, because we can see that should be closer to 100%. Red is not doing too bad, or maybe 150%. Yellow's doing good at 150. So this is way too high on marketing without the LOI. So these are the numbers that drive your LOI, and you can see your Rosé, and you can see down here capacity and plant capacity. Let's look at family. Again, this in family where blue is doing great and yellow's not doing too bad. Um, Red is not doing too bad either, but blue is doing awesome. So what's our capacity here percent wise? They should be in the, yeah, our unit costs are very close here. That's really important. And in terms of demand, what is yellow doing in family compared to blue? In profit, well, you can see also yellow's dropped their price 63 times back to 30. Comparing that to, that's family low cost. Everybody should be pretty close. Everybody's close in low cost. Let's look at, all right, here are numbers. Are we all the same? Yeah, so that's only one difference in low cost. Again, where our is low cost? Is low cost? Wait a minute, this must be eco. This blue is having some problems. Is this eco? Yeah, this is eco. Okay, so let's look at blue here. Yeah, we've got our engineering compared to, and yellow is not too bad in eco, nor is red. So blue, you just got to look at these numbers and say, why am I down here getting these red flags? What are they compared to what everybody else is doing? And why did EBIT get killed here compared to cost? and compared to our share must not be very good here. Yeah, okay, so our share of market is down to it. So our costs aren't getting spread over as big of an installed base. And in eco, that's not unusual because it's hard to build momentum and market share there. Let's see what we got in family. Everybody's doing pretty well in family. And nobody's had cash problems here, right? No, when we start to see our cash positions being at 19,999 means we've got a government loan. Everybody's cash is doing great here. So everybody's being moderate on their cash, which means CapEx is being managed very well too. So here's your screenshot. You want to do analysis. I'm going to also put these into my own cube and other processes and take a look at the ratios and some of that to give you more kind of direct kind of decision three stuff. And there's a before decision three video also on Model Professor on YouTube. And between this recap and those and what I put in Halo, you should be really well set up for decision three. Decision three is like the key turning point decision. Let's stop sharing here because when you get to decision one, all right, here got 1, 2, 3, 4, 5. Decision one, you know nothing, and you did really good. It's amazing. You saw what you were handed in zero, all zero from decision zero on, which is everybody doing well, not very well in image, but really well in family, doing terrible in eco, and doing like not really good in low cost. And so you go two more decisions up, and you'll see that both red and yellow have evened up close to the line. Blue is still down in eco and low, but they're doing so much better in family image, the growth ones. So the different portfolio strategies, you can see that what's that's going on. So decision one then to two, and now three is your middle decision. Five, in a couple of weeks is very different because there's a secret there about inventory that of how you change the models and what happens to your inventory. And don't even think about it right now. But before five, there's a video you have to watch because number three can become number one really quickly because of inventory in the last decision, because you can probably guess this, there is no period six. So there's no worries about having to plan for the next term in terms of production. You want to broom the inventory you have. And it doesn't mean you drop the cost to nothing or you'll drop down to zero, but you can price high but get better features in decision five. So three is where you really make your money and get your returns on family and image if you're going to. By four, if you've invested in eco and low cost, they start to be the grower. But because of the investment I've already seen here, I can tell you that this is going to go to the end of the sim with image being a strong line and family being a fairly strong line. Now, is there an opportunity in low cost? Blue can turn it around and red can do a lot better if you want to within low cost. And you just got to look at what you're doing in terms of production. Blue really, yellow, if they just go back to where they were at image, and red especially, which is neck and neck with our leader, has to be careful of image. Um, Blue, you're doing everything right. All you've got to do is fix eco, and yellow, if you fix image, it's above the line, so you're doing great. I mean, you're at break even, which you have to do with the turnover, but you also have to kind of be careful about how you're backing off of eco, or if you're going to actually invest in it. So that is enough for today. Thank you for watching. If you're watching on a Sunday or on a Monday, we will see you in Halo. And again, to always remind you, do not forget to check announcements. That's where I'm going to have a lot of this stuff in Halo for this next decision. And you're doing great. Everyone did great on the personal value assessments. I was really impressed with it's all graduate level work. So thank you, and we will see you next time.